Hi everyone, we are Group 10. I am Jason and here is Musa. Today we are going through a case about Mark and Kay. Here is our scenario. The question is, if Transpire is insolvent, are Kay or Mac personally liable under the CA 93 for the amount owing to the stationery supplier? This case is trying to discuss the director breach of their duties. We will explain it through the following issues. So within this case, we're gonna use the CA 93 section, Mason and Lewis case, and the solvency test to apply to this scenario.
We think that both K and Mac are satisfying the definition of director as mentioned in Company Act, Section 126, subsection 1. When they acquired HIT, both of them hadn't checked the financial situation of their company. Both of them knew that Transpire would face cash flow problems. As we know, the company later started to meet issues on its rent and wages. This information within Mac's capacity, but he urged ongoing the transaction, i.e. order for stationery supply. This is an indication that Mac was not acting for the interest of the company. He knew about the bad financial situation. He knew that such order would lead to company insolvency. Besides that, it was clear that Mac didn't take the proper steps before doing the order, like discussing that with Kay or returning back to his accountant, or to check the financial situation and making the solvency test, which means that he didn't consider the creditor's interest. We believe that he had the intention to incur debt without returning it back. When Kay had the letter and didn't inform Mac about the HIT liquidation, she thought that would help Mac. That was a careless act from her side as a director. We think that she made a tort of negligence. Kay didn't stop Mac as well from performing the large order of stationery, although she had rich info about the current financial status compared to Mac. When we apply Mason and Lewis principle, we can see that the same circumstances apply to our scenario as well. Both directors knew about the financial crisis that their company faced, but they insist on going through actions that would lead the company insolvency. As a conclusion, we think that both Mac and Kay have breached the Company Act in sections 131, 133, 135, 136, 137, and section 380, subsection 4. Both of them could rely on section 131 and section 133. But the fact is that they failed to ensure proper reporting system were put in place. That caused or allowed the business to be carried in a manner likely to create substantial risk of serious loss to creditors. Kay relied on hope rather than facts when she agreed on HIT acquisition, and when she didn't prevent him to do the stationery order to pass bad financial situation. Kay could say that she had delegated final decisions to Mac based on section 130, but in practice there was no delegation of authority. It was clear that Mac knew the situation, even with the fact that Kay had the HIT liquidator's letter. He had the full intention to do the transaction to increase the company's assets. Even he wants to rely on the liquidator letter hiding. That will be irrelevant since he had enough info about the financial situation. We believe that they both would have personal liabilities toward their creditors.